You're tuned in to Agriculture Today, and we start our Friday show, as we always do, with a grain market update. And we're joined with K State grain economist Dan O'Brien for that update. Dan, thanks for taking the time to join us today.
Thank you, Shelby. Appreciate the chance to speak with you.
Dan, kicking off our grain market conversation, as we always do, with what are futures looking like?
Well, we're certainly in a normal harvest season pattern for our fall harvested crops. And again, corn yesterday closed. These corn 2023 closed at 479 and a quarter, basically sideways down down 3/4 of a cent, just marginally, and we've been trading around four. Well, we had gotten up to just under 510 for a brief moment within the last week and a half. Have come back down to about the average or the middle lower. It's a little bit below the middle of this range we've been trading in, on the low from 470 up to a high of about 510. So we're kind of drifting within that range. Really looking for more market news, and that news could come when we have the November the 9th, as I understand it, next set of USDA crop production and WASDE reports. So uh, without any new hard data coming in, we're just sort of ambiguously, I shouldn't say just drifting, but we're just sort of thrashing around in the middle of that range. And again, pretty typical of harvest time frame. Of course, the other major futures contract that we're watching, it would be November soybeans as an indicator of where that market's at. Closed on Thursday at 1279 and a half, down about 8 3/4 cents. Anymore, that's just within the range of normal volatility and variability in the soybean market, but uh, a little less of a pronounced longer term range or intermediate term range for soybeans and for corn, but generally been trading from about 1250 to about 1325. It just pretty well defined range. The number on yesterday's close at 1279 and a half, just in the middle, just hanging around. Again, and the harvests are progressing. That's probably the thing to bring up on this for soybeans are we're with I guess the numbers as of the last part pardon me, would have been last Sunday. We were about The national number was about 40% harvested. Soybeans in Kansas were about 71, and I think that when we are affected by drought, it's a lot easier to go more quickly in terms of harvest, and we've certainly seen that for soybeans in Kansas. The national U.S. corn harvest number, again, which would have been on October the 22nd when that last number came out, we were at about 59% harvested. The Kansas number again was at 82. And again, I just repeat, that's the impact of a dry year. You don't have as much quantity to go through, and you add into that on the fringes, in some cases, fields that aren't harvested because of one set of difficulties or another, and you end up with that. I always try to watch also grain sorghum following closely with corn. That we're at for grain sorghum. Excuse me just a second. Nationally for that, we're at about 67% harvested, actually a little bit ahead of corn. Here in Kansas, we're 57% harvested. So, we Midwesterners, we generally are pretty used to seeing the corn come out first, and then the grain sorghum often take just a little bit longer to mature, to dry down, etc. But so in Kansas, that's playing out. The corn's coming out first, grain sorghum following, and so I guess back to the future side, we're in a harvest mode for those two crops, and that's put us at the situation. I think where many farmers are looking to the cash markets. They'll be if they're not satisfied with these prices, if and they're not driven by cash flow needs, they're probably storing grain and wondering about the opportunities then for post-harvest gains that would come about from that approach to marketing.
And Dan, you mentioned the cash market, and so what numbers are we seeing there?
Um, Again, kind of drifting prices that cover costs in most cases, with okay yields, but for those that were caught short yield wise, with lesser units just to spread the monetary expenses over, probably. Uh, Again, sideways to perhaps not covering costs if they were caught short on the yield side. But cash prices for corn, uh, right here during harvest. Again, you run from a high. This is as of Thursday the 26th, yesterday, high of 504 in the Garden City area, positive 25-cent basis, a low or a couple lows in the Topeka and Columbus areas of 459, again, about 20 cents under. We're at the place now. Well, we'll compare what we have now for corn harvests to what the market is offering a year from now, just to get some idea of where people think things might go. And in those cases, we do see Dees corn for 2024 actually at 509, current Dees corn 479 and a half. So that might just be the uncertainty of what we don't know what's going to happen in 2024. But as we sit today, you've got about a 30-cent higher Dees 2024 corn market than where you're at now, and because of that, some I guess I call them partially attractive new crop bids for that. Although it's probably it'd be out of the ordinary to see many Kansas farmers forward contracting for next year when they haven't even got most of this year's crop out yet. That's out there to watch. I would just say quickly for grain sorghum, continuing the trend of grain sorghum prices in a number of these export-oriented areas being pretty strong relative to current corn. That stands out the most actually in Salina, Topeka areas, where you've got about a 20 to 30 or in some cases 40-cent higher bid. When you got a strong bid that jumps up, somebody's probably filling a train someplace, or they have a commitment they're trying to fill. And the new crop bids for grain sorghum, actually, they're at or below where the corn bids are. So just take that into account for thought. Soybean bids, again, when farmers are used to seeing 13s and 14s on soybean prices, now they see a high bid in the Topeka market at 1249, Salina 1239, Hutchinson also 1249, and then other places about 1190 thereabouts. Again, the Colby, Garden City, Columbus bid at 1220. So again, you've got a situation where it's still historically a very, very good price. We may tend not to want to store beans as much in Kansas for longer periods of time. I'm not saying people don't, but we tend to move them more. So it would be my understanding. So you've got the historically very good prices, but given what we've just experienced in the last 12 to 16 months, lower than our reference price that we'd like to have. Pardon me. And then soybean new crop bids for next year actually are lower than bids for this year. In November 2024, soybeans at 1257, November 23 at 1279 and a half. So the market in some small way is signaling that, hey, we think we're going to have a lot of soybeans next year. And when you do look at the new crop bid price ratios, they do, for new crop corn versus new crop soybeans, they're favoring soybeans way out there in 2024. So I guess that's just where it's at. And just to mention wheat, wheat market has its own set of international struggles that we could talk about if you wanted to, but generally the wheat prices have been on a trend lower for since August, generally in kind of a tortured manner, and had closed yesterday at 654 3/4, had been at around $6.75 to $7 not that long ago. And so I think that to try to just summarize in a big statement, wheat coming out of Europe that is priced to move, that needs to move, that can't just go into storage, is coming out onto the world markets, and not only coming into the U.S. but as that wheat substitutes pretty readily for hard red winter wheat, it is not just only coming into the U.S. but also going into other places in the world, competing very strongly with our U.S. product, and puts us in a not a very good competitive situation at this time. You and I talked before we came on the air. So what is this the new norm? And I guess I'm beginning to think of it more like if we keep having a situation where as they grow crops over there in Ukraine and they come out quick onto the market, and they're hard to compete with, it's probably it may be more like a Brazil soybean situation, to where eventually, yes, the U.S. does have some pretty good export markets, but we probably we may have to wait, and the rest of the other sellers in the world may have to wait until these really cheaply priced to sell and move soybeans out of Europe um, get off the market, and then there'll be more room. So at least those are my thoughts right now on that, Shelby.
And Dan, as we round out today's conversation, then talking a little bit more about that wheat world market, is it fair to say that it's basically kind of flooded right now?
It's short-term flooded, and you and I have talked about how the longer-term numbers are not that great. In fact, they're very, very tight, very poor, and it makes a hand-wringing economist, which I guess they pay us to wring our hands and worry about things. Uh, 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 I guess I have the attitude or of this, that we're really focusing myopically on just what's available right in front of us, and really not seeing at all the challenges that are a little just beyond that. And the world wheat market's as tight as it's been since 2007, 2008, if the numbers aren't just off. And so I guess the market may not recognize that until you'd have a drought in the Black Sea region, and those supplies, which are flooding the market from both Russia and Ukraine, and if they'd be shortened up, then what right now we're counting on, and kind of myopically again, just lots and lots of cheap wheat, wouldn't be there, and we look around and say, gosh, there's not a lot of wheat anywhere else either. Uh, so anyway, that's one way to try to piece at least my thoughts together on the world wheat market and what we're seeing right now.
Dan, I appreciate you taking the time to join us today and give us a grain market update.
Yes, thank you very much, Shelby. I appreciate it.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but we'll be right back.